VeleroDao is the main infrastructure project for the Velas blockchain. And that's why in yesterday's video, I said a 10,000x. Most people are going to sleep on this and miss the boat and not recognizing what VeleroDao actually is. So we're going to do a deeper dive, and then I'm going to show you how you can literally mortgage your Wagyu swap on VeleroDao and pull out equity. Yes, your Wagyu swap is like a house, and you can pull out equity and use stable coins to buy other cryptos and still own the underlying asset. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. Today's a big video. Today, this is a big boy project. This is no joke. VeleroDao. I don't think I did it justice yesterday, so I needed to get this off my chest. Now, what they've said on their website is, we have forked MakerDAO for the Velas blockchain to have its own stable coin. It's like its own central bank. So VeleroDao is the main infrastructure project on Velas. This is no Mickey Mouse project. This is no small play-to-earn game. This is not a tiny project. This is powerhouse. And today I'm going to make it clear to you on why. Because I was reading your comments yesterday. I'm like, I don't think most people are getting this. So USDV is the first collateral-backed stablecoin on the Velas blockchain. You can mint USDV by adding assets from Velas as collateral. So today we're going to use Wagyu swap as collateral, and I'm going to show you, literally we can do a live example of how you can use it as collateral and pull out equity out of your Wagyu swap. So it's another major utility for Wagyu swap. So I think that's going to be another thing that's going to cause it to really surge in the bull market. Hedge your funds, use whole potential of your asset, use the whole potential of your asset, and trade with VeleroDao. So what they've said on their website, right, is they're a fork. So basically what it means, if I can, where's my laser point? I got a different setting today. Okay, I haven't got a laser point today. Oh no, I'll use this laser point. Hold on. I'm going to use this bomb. All right, so here they're doing a direct comparison to MakerDAO. So MakerDAO, where it has Oasis, here on VeleroDao, it has Velero. Where MakerDAO has DAI, the DAI stable coin, VeleroDao is going to have USDV. And this is live and kicking right now. Where the governance token is a Maker on VeleroDao is going to be VDGT. This is the governance token that's launching on Valaspad on the 1st of February. But what I wanted to do, there's this great visual, right, that I saw ages ago, and I just dug it up on the Ethereum blockchain. So Ethereum is still the biggest blockchain, especially when it comes to DeFi, decentralized finance, finance without any centralized party, finance with no middleman, finance direct peer-to-peer directly with the blockchain. So now we're just going to do a direct comparison, because when you see what Velas is doing, what VeleroDao is doing, and what's being built right in front of your eyes, this is one of the lowest hanging fruit opportunities to really leverage big boy projects that are being launched on a new blockchain that's faster and cheaper transactions, especially when you're having this new mass adoption coming over the coming years. People don't like high gas fees. And I know ETH is moving to ETH 2.0, where it's going to move to proof of stake, but that's still going to probably take 6, 12, 18 months or so. So let me just move myself to the side. So this is the full DeFi stack. You know, I know it's evolved since this, but I like this as a word, or as a visual. So you've got layer 0. Layer 0 is the ETH stack, right? The ETH stack rate. So Ethereum on the base rate. So when there's a new blockchain, which is what we're referring to as Velas, which is a fork of Solana and EVM compatible, it is looking like this, right? So the base layer, layer 0, is Velas, the Velas blockchain. And we know Velas is alive and kicking. They're launching a lot of projects. They're building a lot of partnerships. And now the official sponsor of Ferrari. You know, they launched their first DEX via the Bluezilla ecosystem, which is Wagyu swap. So layer 1 for the Ethereum ecosystem and decentralized finance is the DAI savings rate stability fee. Now, I know there's other things that I've launched since, but this was massive in 2017 when this launched. It's like the central bank is allowing new currency to be issued, but it has to be backed by gold. Here is backed by Ethereum and other cryptocurrencies. So what's happening now is the governance token of Maker, which is the main protocol, is on the Velas blockchain, is going to be where it's going to be DAI as the savings rate is now going to be USDV on the Velas blockchain. Where you got Maker, it's going to be Velero, right? This is what I don't think most people are seeing, which is VeleroDao is the main infrastructure of DeFi for the Velas blockchain. How I see it is, cars are going to need a road. So who's going to build the roads? Airplanes are going to need an airport and a landing area. Who's going to build the landing area, the airport itself? Shops need like a shopping center. Who's going to build the infrastructure? So VeleroDao, this is the main infrastructure for the Velas blockchain. Again, I'm going to go back to the other slide because I don't think people got it. We forked MakerDAO for Velas blockchain to have its own stablecoin. So VeleroDao, this is literally on the VeleroDao blockchain on the website. So VeleroDao is the main infrastructure project on Velas. So what we're looking at when we're looking at the visuals is this, where we've got Maker is one of the main infrastructure projects for the Ethereum blockchain. Here we got Velero. So anywhere where we see Ethereum, it's going to be Velas, the VLX token. That's the protocol. It's cheaper, it's faster, and it's innovating like there's no tomorrow. So what's the next layer? Layer 2 is borrowing and lending. So on Ethereum, you have Compound, you have DYDX, you have a few other protocols. Layer 3 is the ETH locked in DeFi. Here is going to be Velas locked in DeFi, right? The application layer. So layer 4 is liquidity. You have a lot of applications, and then at the top you have the users, right? You have the users at the top. So one of the main protocols that we're going to use today, here on Ethereum, the main DEX is Uniswap. You should know that by now, right? Uniswap, is still the biggest player when it comes to decentralized exchanges. It's the biggest competitor to centralized exchanges. However, when it comes to newbies and retail investors, they just want fast, cheap transactions. So what's happening on the Velas blockchain is Wagyu swap, right? So today, for the rest of today, we're going to focus on how to mortgage and release equity from your Wagyu swap. But take a snapshot of this. Let's take a moment, people. This is what's happening because everyone wants to get rich. I get it. Make money today. And, most people come to crypto to get rich, but you should stay for the technology because it's like the internet. It's like email back in 95. People really didn't know what the @ symbol was, right? But now we can't live without email, right? It's so fundamental to our lives right now. And this is why blockchain technology is reducing the cost of trust by up to 10,000 times, right? I'm going to show you how to do a mortgage with an asset, and it's going to take minutes, even less than minutes, right? It's going to take longer just to teach you, but when we're actually doing it, it's going to take minutes and it's going to cost pennies. It's going to cost pennies. And this is what's happening with actual property, where they're using oracles to see what the property is worth. Then it gets formed into an NFT and put onto the blockchain. So there's off-chain data going onto on-chain data. And then that is recognized, that value, that equity is recognized. And then with decentralized finance, you can borrow collateral against it, whether it's DAI, whether it's other stable coins. And there's projects doing it. There's Centrifuge with Tinlake. They're doing it right now. It's got proof of concept already. So this is where the world is moving. Everything that's a contract today, over the next 10, 15 years, even less, all those contracts are going to move into smart contracts, right? That's just the way of the world, and that's what blockchain allows. So now let's dive into the practicality of this, right? So we want to look at this. So I'm going to use what we understand, right? We understand houses, we understand mortgages. So we're going to use that terminology, but this is what's becoming possible for what we're going to look at. So we got a house, right? The value of the house today, we're just going to use this example, is $100,000, right? We're going to keep it $100,000. And we take out a mortgage of $40,000, which means there's a remaining $60,000 equity in the property, right? That makes sense, right? So the total collateral is $100,000. That's the collateral is the asset is the property. And we've taken out a mortgage. You're familiar with the term mortgages. We've taken out a loan, and we've got $60,000 left in this. So what we're going to need to become familiar with is new terminology. We're used to terms like loan to value, right? We're used to those terms, but we might not be used to terms like collateral ratio. That's not a common term used in the UK anyway, when it's just standard mortgages. What is a collateral ratio? Because this is going to be important for the next part. When we mortgage our Wagyu swap, right? It just is a formula, which is your collateral, which is the property value. The property of the value is 100,000 divided by the mortgage that you've taken out or you want to take out. And then you times that by 100, and that gives you your collateral ratio as a percentage, right? If you don't times it by 100, it would just be as a decimal. So in this example, the collateral ratio to the mortgage is the value of the house is 100,000. The mortgage that we've taken out in this example is 40,000. So 100,000 divided by 40,000 times 100 is 250. So it's 250% collateral ratio. Hopefully that makes sense. Now, if we're using our normal terminology, loan to value, it means 40K is what we're taking out as a mortgage, and the value of the property is 100K. So 40 divided by 100 is 40%, right? So we just want to get these kind of terminologies because everything is difficult before it's easy. So when we're talking about collateral ratios, mortgages, loan to value, etc., we just want to get familiar with the basics so you can see what's available to you in DeFi. Whether you're using Ethereum, whether you're using Binance Smart Chain, whether you're using Velas, we're going to use Velas today. And Wagyu Swap. Wagyu Swap's our house today. So now, what happens with property over time in general terms? Well, every 7 to 10 years, property values tend to double, right? So let's say our collateral doubles in value, right? So property was worth 100,000 and now it's worth 200,000. So it's doubled in value, right? So our home is doubled in value. This happens. So now the equity is 120,000. Like, where do we get 120,000 from? Well, if the value of the house is now 200,000, right? 200,000, and our mortgage is still at the rate of 40,000. Well, 200,000 minus 40,000 is 160,000. Should be 160,000. Why did I say? That's my math is off today. Should be 160,000 equity. What did I get? I'm gonna have to correct this. Let's correct it. Oh, here we go. All right. Maybe I shouldn't have corrected it. All right. Because I know in the comments you're going to be like, your math was off. All right, here we go. Bang. All right, there we go. So hang on a second. All right, so we've got equity of, it's got even better, right? 160,000 equity. So a couple other things, then we're going to go into the practical. This is important. This is really, really important because DeFi is here for you. It's here for you. And it might not feel comfortable right now because, you're not used to using MetaMask or it's quite new. You're not quite comfortable with smart contracts. There's no middleman. So you're responsible. You're the bank and you're responsible for your actions. There is no one that you can go to. So what we want to look at here is collateral to mortgage ratio in this new example. So now the value of the asset, the value of the collateral in this case has gone to 200,000 and the mortgage is still 40,000. So that means the collateral ratio has increased, which is healthy. Means it's now 500%, right? Basically what we've got as a mortgage, times that by 5 or times that by 500% equals 200,000. This is the collateral ratio. It's new jargon that we want to get familiar with. Loan to value has now halved because the property has doubled in price. So therefore the loan to value is now 20%. I'm hoping this is making sense because it's going to be important for the next phase of this particular video. Maximum mortgage. So now we want to know what is the maximum mortgage. So what we're going to see when we look at VeleroDao and we're using Wagyu Swap is going to tell us the maximum mortgage is a 150% collateral ratio, right? So we would just want to get the simple math on how do we work out because there is something called a liquidation event. So it's all done on the blockchain. It's all done via smart contracts, which says if your mortgage goes above 150% collateral, below 150% collateral, it will get liquidated and there's a liquidation fee. So we need to be aware of the moving parts and the risks associated with this as well, because there are risks associated. It's a bit more of an advanced strategy if you haven't done this before, but it's important to know because this is the way the world is moving. Not only this bull run in the next 3 to 6 months, we're talking about 3 years, 5 years, 10 years. This is the way everything is moving. So it's now all about sharpening your axe. You're prepared for this change. So collateral, which is the value of the property, how to calculate the maximum mortgage, you simply just divide it by 150%, which is what they're going to tell us. As a decimal is 1.5. So in this case, it's going to be 200,000 divided by 1.5. And we're going to go into that in a bit more example in a second. We don't want to necessarily take out 150% collateral ratio because it's too much risk. Because if the price fluctuates to the downside, you'll get liquidated. So it's better to go for a ratio of 2 or 2.5 or 200% to 250%, 300%, 500%. It's just a bit safer. So now we have our Wagyu Swap house. Yes, it's a Wagyu Swap house. Why am I saying a Wagyu Swap house? The asset now, the collateral now is going to be Wagyu Swap. You can also do this currently with the VLX token also. But we're going to use Wagyu as the example. So let's just say you got $10,000 worth of Wagyu at today's price. It's $10,000, right? That's the house. It's worth $10,000. The maximum mortgage that we can take out with the collateral ratio of 150% is, do the math, collateral divided by 1.5. We said the safer one is by 2. So with Wagyu, with the ticker symbol is WAG. Hopefully this is making sense. I spent way too much time on this morning. I got carried away, but I thought actually, if people don't understand the full stack of DeFi and what's being built, it's hard to see. And then it just sounds like we're just shouting out random numbers. So this is very, very powerful and very, very important. So WAG, maximum mortgage. Well, our collateral is worth $10,000. The collateral ratio that VeleroDao allows us to use is 1.5 or 150%. So 10,000 divided by 1.5 gives us the number of 6,667. And what that means is we can take out equity of the amount, take out a mortgage, like release that equity as a mortgage and get 6,667. But we still own the house. So if the house appreciates in price, we still benefit from it, right? The house can also depreciate in price. So that's why we don't want to max out the loan, because it's not like your typical mortgages. Here we have, because it's directly on the blockchain and there's no middleman, there is a liquidation event, meaning if the value of the house goes below a certain point, it will sell your house and pay off the loan. And then you're free from the loan, but then you no longer own the Wagyu. So that's important to know. So here we'll release 6,667. But we want a safe mortgage, right? We don't want to be living on the edge, because 10% down, bang, we get liquidated. There's no real benefit of that. We want to have a ratio of 200%, collateral ratio that is. So 10,000 divided by 2 gives us 5,000. So we can comfortably take out a loan to value of 50% or a collateral ratio of 200%. Better would be 250%. Even better would be 300%, because just to protect yourself from the downside. So there's one last part I want to do on this. Hopefully this is making sense. Hopefully you're going to find this very, very useful. Just like in the previous house example, our Wagyu swap house doubles in price, right? Let's just say it goes from today's price, I think it's like 31 cents, cheap as chips, and it goes to 62 cents. Our collateral value of $10,000 is now worth $20,000. And we're going to stick with the safe mortgage, right? So we took out a safe mortgage in the previous example. $10,000 was our collateral. 2 was the ratio that we used. So we took out $5,000. Now, if the price doubles, the loan to value is now 25%. Why? Because the collateral is worth 20,000, because the price of our asset, the price of Wagyu swap, has doubled in this example. So the loan to value is now dropped, which also means that the collateral ratio has increased to 400%. So now we can safely release if we wish to do so. It's not mandatory. It's your money, it's your mortgage. But the thing is, you don't have to have any middleman. There's no like a 6-week process, no get your property valued, because the data is live. There's oracles that are given on the live data feed. So we got that information straight away. You don't have to hire like a solicitor, pay for a surveyor, wait 6 weeks, 8 weeks, 3 months, get multiple valuations. No, it's literally minutes and seconds. So if we wish to do so, we can take out another 5,000 and take our collateral back down to 200%. So hopefully this math's making some sense to you, and take the loan to value back up to 50%. I know we covered a lot of numbers there, but the main premise is VeleroDao is the main infrastructure project for the Velas blockchain, and it allows you to mortgage, which we're going to do a live example of in a second, mortgage your Wagyu swap or your VLX token, and over time, they're going to be making more assets available on the Velas blockchain to do this very thing with. So now let's actually dive into, let me get rid of this. So VeleroDao, this is the website. When we scroll down, it tells us what we saw. Yep, we're happy and hunky-dory. We are now going to click on, let's generate some USDV. This is a stable coin for the Velas blockchain. It's the first major, USDV is the first collateral backed, meaning it's backed by, it's like having the US dollar used to be backed by gold, right? And then it wasn't. Now you can just print, the government can print as much money as you want, as they want. Here, they're only putting USDV with the collateralization of particular assets. At the moment, it's VLX and Wagyu swap. So let's generate some USDV. So when I click on this, it will open up the page, generate USDV using crypto as your collateral, right? So you can kind of go, crypto right now is the house, and there's no mortgage on the house. and we can release equity based on the value. So what I've done in this particular wallet, I've just created a new wallet and I put in 1,000 Wagyu swap, right? Just so we got an example. So you can see that they give us two assets availability, right? We can get a mortgage against Velas tokens, VLX, and which what we're going to focus on today is the Wagyu swap. So this is a new wallet that I've opened. So first we need to open a vault. And when you're doing this for the first time, you need to agree to some terms. So sign the message. No, we don't want to switch. PancakeSwap wants me to switch. No, go away, go away. Here we go. We want to sign this message. Yep, we're happy with this. Yep, fantastic. And then it says, before you can get started, you'll need to read and accept our terms of service. So you can click on the terms, view the terms. Once you're happy, say, yep, I agree, continue. Bang. So what you'll see here is in this wallet, I got 1,000 Wagyu swap. And here it says, simulate your vault by configuring the amount of collateral to deposit and USDV to generate. So in other words, it says, okay, you've got a certain amount of Wagyu swap, which is the house. How much of that do you want to deposit? So then the protocol can calculate how much USDV is the maximum you can take out, and you don't have to take out the maximum. In fact, it's bad practice to take out the maximum because we need to leave a bit of leeway. So let's just say we want to deposit our 1,000. Yep, we're happy with that. We want to generate some USDV. So you can generate the USDV stablecoin within the same transaction and then set up the proxy. So let's say, let's do it all in one go. So let's say we want to generate 100 USDV. What this is telling us now, and it gives us all the information in pretty much layman's terms, it says collateralization ratio is 327%, right? That's healthy. That gives it a lot of leeway, right? Because the maximum or the minimum collateralization ratio is 150%, and you'll get liquidated if it drops below that. So now this is a healthy buffer. So you can go, oh, actually, do you know what? I wouldn't mind a bit more. Let's take it to 150 USDV. Now it says here, with this action, your vault will be at collateralization ratio near the minimum required. So it's saying, it's just warning us that this 218 is quite close to the 150. So you go, okay, we'll take the advice. Let's say we'll take out 125 USDV. Here it also tells us the liquidation price. This basically says if Wagyu swap drops below 18.75 cents, you will get liquidated. Your Wagyu swap will get sold, your loan will get paid off, your mortgage will get paid off, and that's it. Job done. You still have your USDV, that's yours to keep, but you no longer own the Wagyu swap. So we want to be aware of that. It tells us the current price done by an oracle of Wagyu swap is 32 cents. It updates every 2 minutes. Here it tells us our collateral that we're going to lock. We're going to lock 1,000 Wagyu swap, which is valued at $327. Vault details tells us the debt that we're going to take, that we're going to do in a second, is $125. Tells us available amount to withdraw. So we'll still have, we can, if we wish to do so, withdraw 427 of our Wagyu. So we've got 1,000 that we're going to stake in the deposit account. Available to generate, the maximum that we can generate is $218. Liquidity ratio, or liquidation ratio, is 150%. Stability fee, they're going to charge us 4% stability fee. That's part of the protocol. That's just part of doing business in this. And then liquidation penalty says if you get liquidated, because they don't want you to get liquidated, they want you to redeem your mortgage, pay off your mortgage, and then get on with your day. If you do get liquidated, there's a 13% fee. And again, you can go into the T's and C's in a lot more detail. You can look at the oracles and so on and so forth. But this is just the basics, so you understand what's available to you through decentralized finance. There's no KYC, there's no middleman, there's no limitations. It's just literally, bam, straight onto the blockchain. So now let's click up Set Up Proxy. It says create your smart proxy. With your smart proxy, we can perform multiple actions in one transaction for your vault. So you're creating your own vault. This proxy only needs to be set up once, but you can edit it in the future also. So let's create the proxy. It's going to ask for to sign off. It's going to charge us 0.06 VLX. Yep, we're happy with that. 0 of 10 proxy deployment confirmed. So take I think it's around 20 seconds, 10 seconds, give or take. My Wi-Fi is always a bit slower when I'm recording. So we'll see. Let's see how long it takes. But this is the equivalent of being at the bank, signing some documents, getting your property valued, paying for solicitors, paying for surveyors, 6 weeks, 8 weeks. Here, bang, we just done it, right? So this is the technology. This is what we want to be aware of, what's happening, why it's a big deal. So now it says create your smart proxy. So we've done that, yeah. So now we want to set the WAG allowance, right? Set a WAG allowance, unlimited allowance. You can set deposited amount, so we can limit it to 1,000, or we can create a custom amount. So here we're just going to say unlimited allowance for now. We'll confirm that also. So it means we can add more Wagyu, and again you can edit these as well. This is specific to your wallet, and then we're going to continue, and we're done. Confirm your vote. Yep, done, done. Generate. Yep, done. We're going to confirm, create our vote. So again, it's just going to confirm the details, review and verify details of your vote. In your wallet is 1,000. So we're going to put that in. Moving, we're going to put 1,000 into the vote. Remaining in your wallet. So we're putting 100% on Wagyu in this particular example. We're going to generate 125 USDV. So VeleroDao are issuing, it's like issuing new currency, 125, but it's backed by my Wagyu swap, right? That makes it infinitely sustainable. So this is like the central bank when they used to have the gold standard, but they moved away from the gold standard. Collateral ratio is going to be at 261%. So we go, yep, we're happy with that. If we wanted to see it as a loan to value, we can calculate it like this. We can do, we'll be taking out 125 divided by the value of our currency is $327. So it's around a 40% loan to value, right? 38% loan to value, right? So we can say that, okay, that's healthy. Liquidation price. So just confirming if the price of your Wagyu swap, which they have no control over, drops below 18.75, we will have to sell your Wagyu swap. You'll get charged a 13% liquidation fee, and you no longer own that Wagyu. But the USDV that you've generated, $125 worth, is yours to keep, and you never have to pay back because they've now sold off your house, so to speak, to pay off the mortgage, and now it's no longer there. So I'm happy with that. We're going to create the vote. Yep, this one's going to charge us half a VLX, is 0.49. Yeah, that's fine. It's around 18 cents. Creating the vote, bang, done. Go to vote 317, and we can check out the details. Bam, and it gives us all the information. It says the collateralization ratio is 261%. We've got collateral locked to protect ourselves. Is 1,000 Wagyu tokens. Down here it says they've issued us 125 USDV available to withdraw in terms of Wagyu. Available to generate, we can generate a further $93 if we wish to do so. That will take us closer to that collateralization ratio of 150%. They've charged us a stability fee of 4%, and it gives us the other information. So we're going to do two more things now. We're going to go to Wagyu swap. I think I got the right wallet here. Let's just refresh the page. Is it the right wallet? Yeah, it is. So what we're going to do is now we're going to go to USDV. And you'll see it's in our wallet. Bang, 125. Right now, because the protocol is quite new, the USDV, we'll see it here. Let's just get some USDT. This is cool if you just want to, it's almost like a free 10%. One USDV is currently worth $1.13 USDT. Yeah, and it will balance out. This is not, it was around 40% difference, 30% difference. Now it's around a 13% difference. So what we can do is, again, this is a new wallet that I've opened. So this is just going to allow us to do USDV. Done. Great. That was fast. Let's just say we want to convert our maximum of 125 USDV, and we're going to receive 140 USDT. I'll go, yep, that's fine. But keep it in mind, if you want to release your Wagyu, you do need to pay off your mortgage. So we're going to confirm the transaction on Wagyu swap. Yep, that's fine. Yeah, we got that in there already. That's fine. Let's just see, have I got that in there? Yeah, that's fine. Great, done. So now we've got 140. So we just made like 13%. So there's a discrepancy. One last thing actually we want to do is just want to jump into the Wagyu price action, because there's risk involved in this. And I'll cover a lot today, and I want to just loop just because I want to make sure this is clear to a lot of people. With Wagyu swap, it's dropped significantly, right? And it's kind of expected. One, because of the kind of bear part of the market that we're going into. Also, keep in mind over here and over here and over here, Wagyu Swap was releasing some very generous APYs just to get users on board, staking and everything else, and then people just taking profits, profits, profits. But now we've got this new use case for Wagyu Swap, where if someone's got $100,000 of Wagyu Swap, let's just say they believe, like me, let's say they're like me, and they believe Wagyu Swap, when Bitcoin really starts picking up and things move to the next level, that is going to get to $3, $6 and beyond. But you don't want to sell your Wagyu today. Let's just say you've got $20,000 of Wagyu swap, $20,000 of Wagyu in your wallet, you staked it, whatever it is, but you think, man, I need 10 grand. I need 10 grand because Ethereum is down and I want to buy some Ethereum. Or, Cross Swap is down, I want to buy 10 grand's worth of Cross Swap. Or Astro Swap is launching, I think it's on the 28th, so in like 18 days or so. I want to buy some more Astro Swap, but I don't want to sell my Wagyu swap because I believe it's going to 10x, 20x, 50x. So, and I've worked hard to build up my Wagyu swap. So what you can do is you can go to VeleroDao, release 50%, have a 200% collateral ratio. Be aware, like in this example, it told us 18.75 cents, which is, let's just draw it like this. It says here, if we just zoom in like this, VeleroDao told us with the protocol, this is today's price. Yep, we get it. If it drops below 18.75 cents with our 260% collateralization ratio, we will get liquidated. So we need to be very aware of that, very aware of that. So, you can go change it. You can put in more Wagyu and deposit it so the collateral ratio increases. So then this line will move further down. So you got less chance of being liquidated. And then you can just release your 10,000, so 50%, or even if it was 40%, right? You want to be a bit safer. 40%, $8,000. Spend your 8,000 USDV. You'll get an extra 13% with today's price because you just saw the arbitrage opportunity. So you'll get $9,000. $9,000. Bridge it across, buy some stuff on Binance Smart Chain, or do what you want with your $9,000. And then if Wagyu does, let's just say, triple in price, well, then you can release some more USDV. If it quadruples in price, you can release some more USDV. And as the property price appreciates, you can just keep releasing more and more and more. So one last thing, I just wanted to loop on this one here. This. I want to leave with this, this here. This part in particular, because this has been built on Ethereum. Ethereum is a big deal, right? Obviously. Layer 0. Now Velas is EVM compatible, so Ethereum virtual machine compatible, and it's a fork of the Solana, and Solana has got a lot of pros, and that's what Velas is using. And MakerDAO is like the main protocol for Ethereum, or one of the main protocols when it comes to DeFi. It's like the central bank of DeFi, and for Velas, it's going to be VeleroDao. Yeah, that's just so important. So when I said, because I read your comments, I read all your comments, and I replied to all of them. And when I read, you get 10,000% or 10,000x, you're reaching now, you sound like so and so. And I'm like, yeah, but let's look at what we have on our hands. And again, it's a governance token. And if big boys start playing on the Velas blockchain because it's cheaper, it's faster, it's as safe as Ethereum, and as it gets more and more traction, more and more users, more and more sponsorships, more and more protocols being launched, more and more applications, because keep in mind that Velas has got $100 million grant that is issuing to new projects to build on the Velas blockchain. It was originally 5, now they've increased it to 100 million. The Velas token has really taken off. So I can see a lot of things, good things happening in this ecosystem. So if you like today's video, like, subscribe, hit the bell notification. I've actually built a free course on the basics and the foundation of crypto. So if you're new to crypto and you haven't got your MetaMask wallet set up, you haven't got, you don't know the basics, how to kind of do your bridging and just understanding blockchain, and even if you've been around for a while, I've actually created it's nine lessons. It's in the link below. It's free foundation course on crypto. I want to build some other stuff as well. So, let me know. What do you want me to build for you whether it's courses, whether it's classes, or if it's just content like this, because there's a lot of information and it is the new world that's been created, but everything is difficult before it's easy. So that's very, very important to understand. So if it doesn't make sense, that's okay, because that's life, right? You don't learn to drive a car on day one. Yeah, it takes a bit of time. So now let's finish off with a quote. I'm going to keep it with the same as yesterday because I think it's a very valuable lesson. It's Henry Ford. It has been my observation that most people get ahead during the time that others waste. It has been my observation that most people get ahead during the time that others waste. We're talking about DeFi, decentralized finance. We're talking about mortgaging your cryptocurrency. You're going to be mortgaging your property on the blockchain within probably the next 5, 10 years. It's just going to be a common thing. You're going to be getting your insurance as an NFT on the blockchain. There's going to be a lot of use cases. You've got metaverse, but metaverse is just not for gaming. It's going to be for social interaction. It's going to be for like your Zoom calls today will go into virtual reality and augmented reality and everything else. So all of this stuff is a new space. So education is going to be absolutely key. And it's not just about the bull run. I know everyone wants to make money. I get it. Yeah, you want your 100x, your 10,000x, your 5x, or your 2x, 50% returns and so on and so forth. But it goes way beyond that also. So just keep learning, keep doing what you're doing, and I'll see you very soon. Don't forget to like, subscribe, share this one. This is a big one because most people are going to miss this one. This is a big project, big boy project, big boy and big girl project, right? Like, subscribe, hit the bell notification, and I'll see you soon.